Yo, what is going on, stock market investors? My name is Jason, and in today's episode, I'm going to break down three stocks I'm buying right now. One's a monthly dividend player, one is a stock that Warren Buffett just bought, and the third stock is going to be a surprise for you guys, so make sure you stick around. All right, let's get into it. A little bit about myself before we get started. I'm a former teacher. I have a six-figure 401k, and I also have a six-figure regular brokerage account with a bunch of other little small baby accounts. I invest with Charles Schwab, unfortunately, because TD Ameritrade just closed, and I also have a Robinhood account as well. Okay, let's get into our first stock. All right, investors, the first stock that I'm buying in June is JEP. This is the JP Morgan NASDAQ Equity Premium Income Fund. This is a dividend player that pays you every single month for your investments, right? The stock is up 11.32% year to date, which is really, really good. That's a solid return, right? But you're also getting 8.81% for an annual basis. That's really, really good, man. So you're getting close to around 1% each and every month reinvested into your portfolio, right? And they also have an expense ratio that's always something you want to take into consideration, right? Because this is a relatively high expense ratio for managing this portfolio that you have to pay them, but the returns are really good and it's pretty safe, right? If you look over the last year, it's a pretty stable stock. Even in the last 5 years, I mean, it's a pretty stable green stock. So you're going to get that 9% pretty much every single year, and you're going to get a little share appreciation along the way. Okay, the first thing that you want to do when you're looking at a dividend player, in my opinion, is click on historical data. I'm on Yahoo Finance right now, and what you want to do, go to time period, and then you're going to click on max. And then next we're going to go to historical prices and then go down to dividend only. Frequency, you're going to do that drop down menu and go down to monthly and click apply. All right, so the reason I'm doing this is I want to see how reliable this dividend is over the last 2, 3, 4 years, right? And it's really, really good. So this is going to date back to 2022. And they pretty much increase their dividend every single year, right? It's been really, really good since 2023. And it varies from month to month depending on how well the actual stock market is doing. But you're not going to get below, 37 cents per share that you own. And the way you can figure out the lowest possible returns you're going to get, the lowest one I see is 0.376. So you're going to go to your calculator, type in 0.376, right? We're going to times that by 12, and that's $4.50. The stock's trading around 55 bucks, so you divide it by 55, and that's around 8% is the lowest you're going to get paid out on a monthly basis when you factor it out on a 12-month scale, right? If you want to know how much you're going to get per month, you take this 0.08%, you divide that by 12, and then you're going to get 0.006%. That's how much you're going to get each and every month. So a little over 0.5% each and every month. And when you times that by 12, you get the full number, which is around 8%. The next thing I always like to do is check out the holdings when you're buying an ETF, right? So you kind of see here sector weighting, where is this ETF's holdings at? Consumer cyclicals, 13%. Consumer defensive, 6%. Healthcare, 6%. Utilities, 1%. Communication services, around 16%. Industrials, about 4%. And technology, about 50%. So you're really seeing that this is a technology-based ETF, right? That's why you're getting this really good returns. Right now, these are the top 8 holdings in this JEPQ ETF. Microsoft, Nvidia, Apple, Google, Amazon, Facebook, Broadcom, and AMD, right? The biggest weighting being Microsoft, Nvidia, and Apple, all coming in at over 6%. And these top 8 stocks make up about 38% of this entire fund, right? And if you look at the fund overview, year-to-date daily total return is about 15%. The yield is coming in right around 8.9%. So if you get no appreciation in the stock price at all whatsoever, you're still going to get almost 9% on your money on an annual basis. And I really like that. And I love that it pays out every month. So you really start to see that snowball effect, because each month you're going to have a little bit more in your account, a little bit more. And that snowball effect really starts to accumulate, and you really start to build out a nice position, right? Okay, let's move on to stock number 2. All right, investors, the second stock I'm buying in June is the Liberty Media Corp Series A shares, LSXMA. This is essentially a media corporation that owns both SiriusXM Radio and Live Nation Entertainment. Berkshire Hathaway just bought a ton of this stock, guys. He bought the LSXMA and the LSXMK. The only difference is the voting rights in these two stocks. He bought over $3 billion worth of the company at an average price of around $33, right? So if we look at the stock year to date, they are down considerably, right? About 28%. But if we look right away at PE ratio under 9, we all know Warren Buffett loves these cash generating assets, right? That's what this Liberty Media Corporation does, man. SiriusXM Radio is a really good cash flow machine. All right, everyone, let's take a look at these Liberty Media Corp's financials a little bit. Here's the quarterly income statement. Up around 1% year over year in revenue. Net income is up almost 9%. Net profit margin up 8%. All numbers I like. EBITDA up around 2%. All right, let's move over to Yahoo Finance, everyone. The PE ratio at 8.22 is really, really low. The S&P 500 is around 20 right now, so that's a really, really good deal. All right, we're going to move over to the statistics page on Yahoo Finance. If we take a look at the market cap, around $6.7 billion. The enterprise value is around $17.66 billion. So we can almost 3x to match our enterprise value, guys, which is great. The trailing PE is like under 8. The forward PE is only at 6. Those numbers are ridiculous. This stock is trading at a ridiculous price to earnings ratio. The forward PE under 6. It seems like a great value to me. The operating margin, the last 12 months is around 20%, which is great. And I always like to look at the total cash to liabilities, which is not great. I'm not going to lie. There's a lot of debt, around $11 billion, and they only have $135 million in cash. So we definitely got to keep an eye on that. That $2 billion in operating cash flow is great, and they're going to be able to pay off the debt, in my opinion, right? Then we're going to look at held by institutions, 62%, which is a good number. The short percentage of float is only 3%, so not too many people are shorting this stock right now. I just think it's extremely undervalued, guys. Extremely undervalued. With that forward PE under 6, the S&P 500 trading between 15 and 20. That means this stock could 3x essentially from a price to earnings ratio and still be relatively cheap compared to the rest of the market. I really want to keep my eye on this stock in the next earning period to see where the trends go. Are we going to continue to trend down a little bit, or we're going to peak back up? And then I just think if Warren Buffett was buying in the 30s and we can get it in the low 20s, guys, it just seems like a really good bargain. If Buffett thought this was a bargain in the 30s and we're getting it in the 20s, it just seems like almost too good to be true. And Warren Buffett does his due diligence with his team. So I definitely think the valuation is really, really fair right now. And there could be a lot of opportunity for share appreciation in the coming years. All right, investors, my third and final stock, the surprise stock, is actually Berkshire Hathaway. I think it's trading at a ridiculously low valuation. The stock is up about 12% year to date, which is a really good return, right? We're about halfway through the year. So you're looking at over a 20% return on your money if this trajectory continues, right? And just take a look at this income statement, guys. On an annual basis, they just continue to crush it top line, crush it on the bottom line. Unbelievable. The revenue is up 20%. Net income is up 500%. Net profit margin up 450%. Earnings per share up 23% year over year. And the EBITDA up almost 900%. There's not a better value in the stock market right now, especially considering the PE ratio is under 12 right now for Berkshire Hathaway. Warren Buffett's fund is trading under a 12 price to earnings ratio. It's insane to me. absolutely insane. We always want to go to statistics to get a broad overview before we do our deep dive on the stock. But the valuation measures, enterprise value is greater than the market cap. I always like that, almost 10% higher. The trailing PE is at 12. The forward PE is around 18, which is still pretty cheap in my opinion for a great company like Berkshire Hathaway, guys. Price to sale is at 2. Price to book around 1 is when you want to buy. And it's a great value right now in my opinion. Under 2 for Berkshire Hathaway is a great, great buy. Profit margin, almost 20%. The operating margin, the trailing 12 months is 19%, right? The revenue, almost $370 billion. That's just insane to me. And this is the best part about Berkshire Hathaway, guys. Total cash, $189 billion in cash they have on hand. And they only have $122 billion in debt. So they have over $60 billion more in cash than they do debt. A lot of companies of this size usually have a humongous debt load, right? And that is not the case for Berkshire Hathaway, right? The operating cash flow is over $50 billion. So they're going to be able to crush this debt relatively easily, guys. And like a little over 2 years, they can pretty much pay off all that debt with their operating cash flow, and they don't pay a dividend, right? So they're not paying out money to shareholders, which is unbelievable. Only 1% of the people are shorting this stock. No one is shorting it, so you don't have to worry about those short attacks. I mean, this stock is so unbelievably undervalued. I would like to see this forward PE around 15 in my opinion. 18 is a little bit high, so that means they're projecting the earnings to come down a little bit. But it seems to me that a lot of the numbers Berkshire Hathaway put out are as a little sandbag, right? So I think they're always beating expectations. They're always beating on earnings per share year after year and quarter after quarter. This stock, like, look at all these beats, man. If you look at the earnings per share, 3 out of 4 quarters, all beats. The annual revenue is just continuing to skyrocket quarter after quarter after quarter, guys. Just look at these numbers. Absolutely incredible. Really impressive. The earnings were down a little bit in Q1, so we definitely got to keep an eye on this moving forward as the economy shifts from this high interest rate environment. And Berkshire Hathaway owns a lot of real estate, right? So the margins aren't so good with real estate with these ridiculously high interest rates. But I think as they come down, Berkshire Hathaway is going to become more and more profitable. That's why I want to get in now and not miss the boat. I think in the next year or two, these Class B shares that trade around $400 right now will be well over $600 in the next 2 years. So that's it, guys. They're the 3 stocks I'm buying right now. Let me know in the comments below. Do you like these stocks? I hope you enjoy these type of videos. If you do, please hit that like button and subscribe to the channel. I'm going to do a monthly video where I put out the stocks I'm buying each and every month. We'll catch you guys on the next video. Peace.